The US economy and the US dollar has not been looking too good at all lately. And the purpose of this video is not to tell you that everything is bad, but rather just to present two different scenarios, two outcomes that could happen here. Is the dollar going to absolutely crash? We'll present to you that argument. Or is this just another little blip on the US economy, which will inevitably just sort of resolve itself given enough time? And at the end of this video, if you could scroll down and just leave a comment, just as people did on this previous video, then we're going to be giving away $100 in USDC. That's right. So we're going to be giving away up to $100. Just as you see here, this last video only got $50, which means we're only going to give away $50. Just give me your Ethereum wallet address. In this case, Prawn Solo, thank goodness he's left an Ethereum wallet address. Nobody else did. So we're going to give Prawn Solo $50 in USDC. There you go. And all you have to do if you want to win yourself up to $100, please do smash that like button and put in the comments below whether you think the US dollar is absolutely done and is going to be toast within the next year or two, or if you think this is just another minor inconvenience for the US economy. So let us begin with the current situation. What we have here is the US inflation data on a chart along with the US interest rates. All the way back here, you can see 1929. This was the beginning of the Great Depression. This is when inflation, which is the red line here, went all the way down to minus 10% for quite a few years. Before coming up into normality. You had the war years here in the 1940s, obviously lots of inflation there, and the whole point here, as you'll see, is that interest rates are above inflation. So for a strong economy, you want to make sure that the interest rates that your government is paying out in the form of bonds or savings is going to be higher than the rate of inflation. And this is exactly the same with cryptocurrency. So if you've ever staked on a proof of stake, like it might be Dash or Ethereum now, or maybe like PivX, Firo, Zcoin and that in the past, what you're doing is you want to earn more in interest payments than what the valuation of the currency is going to lose due to the inflation of the currency, i.e. the more currency that gets given out, the more currency that gets created, that is going to cause the value of that currency to be worth less. So you want to make sure that the interest payments you get are going to be worth more, otherwise you're going to lose money overall. And what happened in the early 1970s is that President Nixon took the dollar off the gold standard, and then we saw some rapid inflation. But the then Fed chairman Volcker, he was doing his best to raise interest rates in line with inflation to try and keep that interest rate above inflation, to make sure that every country in the world that was holding US bonds was still going to get a positive return on their investment on those US Treasury bonds. Unfortunately, if you skip ahead there to 2008, you can see that for the first time in a very long time, we came under for a very prolonged period, and it did not pay at all to be a saver, did not pay to hold US Treasury bonds. Is this just going to resolve itself naturally, or are we going to end up into a big, massive economic collapse, probably a global economic collapse, which would most likely come about because of all the countries in the world which currently are using the US dollar to trade internationally? They have to hold US Treasury bonds so that they have some collateral there in US dollars so that they can trade with other countries. However, if holding those bonds isn't productive, i.e., the inflation rate is so far above what they're paying out in interest payments that it just doesn't make sense to hold them, they're going to start selling off. Countries like Russia have actually been selling off since 2014 and have very, very few left at all. So they're now one of the lowest countries holding. China is still the biggest holder of US Treasury bonds. And when they sell, I think more when than if, then that could absolutely collapse the market. And you may have noticed recently a lot of videos on YouTube suggesting that the Chinese economy is in quite a bit of trouble itself right now. So they might well need the money, and they might need to cash in those treasury bonds in order to pay their own expenses. And if you're trading crypto, obviously you will benefit massively holding all the Bitcoin, Ethereum that you can. If the economy is going to collapse and the US dollar is going to go down, then obviously it's going to pay to hold some Bitcoin. In fact, everybody, whether you're a trader or not, should be holding some cryptocurrencies just as a hedge against a collapsing US economy. But it's not just about that. If you hold stable coins, then you also might need to be worried whether the economy goes down or not. So I don't know if you've heard this yet, but this is Tether, and they've been ordered by a US judge to produce documents proving now that they do actually have the funds to back up all of the Tether which is out there in the world. We don't know what happens if they don't. What happens if Tether goes the same way as Luna and completely collapses? Also, you may have seen this video recently by Allessio, where he talks about the kiss of death happening in the stock market. So I'll leave a link up there for his video, or maybe put it down in the description below, because it is a rather good one. Here, this is the S&P 500. So what he's saying is there's this region, and if it hits it and falls down below, then the market will collapse, because this is something which happened several times before in history. So this is where the line is right now for it, and we're not looking good. Okay, we're really not looking good at all, because of the interest rate decision just yesterday from the Fed. So the Fed put out an interest rate which wasn't quite as much as what people were hoping to see. It was only 0.75% rise in interest rates, rather than at least 1%, which I think the market was really hoping for. And that's now caused a collapse in the price of all the stocks. Now, the only thing which can really save it at this point with the Fed is a rise in interest rates. They can either print more money, or either increase or decrease the interest rates. So that is about it. And the next chance to actually do that is not until the 1st of November. Okay, so that's the 1st and 2nd of November. As you can see here, this is the downward trend line, which we're going down in now. If we continue on this side with no real reason to actually move to the upside of this trend, then I think we're just going to continue downwards and be in a pretty bad place come the 1st of November. But before we get there, let me just present to you the case for a positive outcome. And it goes a little bit like this.
Excuse me. All right, move on. Nothing to see here. Please disperse. Nothing to see here, please.
Pretty much, let's just shut our eyes and hope that everything seems to sort itself out. So as we've seen before, in a normal functioning economy, you're going to want interest rates above the rate of inflation, because we want US Treasury bond holders to be able to make a profit by holding the bonds. Otherwise, they're just going to sell them all off eventually, right? Because they're going to be losing money. And before, when we have been in periods like in the 1970s, we had very good manufacturing, very good GDP ratios. We were very good, strong economies. That isn't really the case anymore. So after 2008, the world really changed, and obviously China is on the rise, India is on the rise. The US economy and the strength of the US dollar as a world reserve currency is now in question. So we don't really know if the rest of the world out there is going to be willing to just sit on the sidelines and wait for the US economy to come around. They may just go their own direction, which of course is what they're already doing with this war in Russia, where they're no longer accepting US dollars for oil. They're either taking Russian rubles or the Chinese yuan. And just a quick note on that one, I'm sure you would have seen in the news back when all the sanctions were coming in that the Russian ruble was going to zero. Well, this is the Russian ruble. Here it was in 2021. Then we had where it went down and crashed terribly during all of the sanctions which were coming out. And then we pretty much didn't hear anything more on the news over here as it continued to climb and climb and climb and climb. So the Russian ruble looking tremendously good compared to where it was a year or so ago, while the likes of the euro and the US dollar, the British pound, all looking pretty weak. But just before financial collapse may or may not happen, make sure to watch this video right here. This is the video where we're talking about an awesome trading strategy that you can automate through a bot on Binance, and it's making me money, it's making a bunch of people, other members of Mutual Ninja money as well. Really, really great bot. Check it out.